Let me start with something very real. If you think Abu Dhabi real estate market is slowing down,
I'm not buying, the market is crashing.
Dubai's property market is slowing down.
Nowadays, I hear a lot of people are saying that Dubai real estate market is going to crash soon.
you're about to be proven wrong. Not by predictions, not by hype, but by the facts that the government has already published. In the last 12 months alone, Abu Dhabi population grew by around 7.5%, more than 300,000 new residents in a single year. And at the same time, thousands of new homes, new districts, and new transport system are being completed across the city. So the question for 2026 is not about, is the market growing? The real question is, are we prepared for the scale of what's coming? Today, I'm breaking down of what 2026 will actually look like in Abu Dhabi real estate, backed by real numbers, confirmed handovers, government strategies, infrastructure plans, and major developments happening right now across the city. But before we dive in, if you find value in deep data-backed analysis like this, make sure to like the video, subscribe to my channel, and share it with anyone who wants accurate and honest property insight. Now, let's begin. Abu Dhabi is one of the fastest growing capitals in the world. The population grew 7.5 last year, crossing 4.1 million residents. And by 2026, we are projected to reach 4.4 million to 4.5 million people. This is not a structural growth, not a short-term expat rotation. Something changed in Abu Dhabi this past few years. People are not just passing through anymore. They're not coming for weeks of sunshine or signing a one-year contract and leaving when an opportunity appears elsewhere. Now, they are arriving with luggage and long-term plans. You see it in the schools, more enrollments, younger families. You see it in the corporate towers, new global names on the doors. You see it in residency, golden visa holders no longer asking, how long should we stay? But instead, where should we build our life? Executives who once rotated through cities every 18 months are now planting roots. Multinationals are not opening temporary offices, they're building permanent UAE bases. High-income talent is not here for a chapter, they're writing their future here. And families, they're choosing Abu Dhabi not as a stopover, but as a home. This level of growth is the #1 force behind Abu Dhabi real estate performance. Abu Dhabi is not growing randomly. There's a plan, and we can see it clearly in the market. Sustainability comes first. Projects like Masdar City, Sustainable City in Yas Island, Saadiyat Lagoons, Jubail Island are built around greener living, less energy use, more nature, and long-term value. Buyers today care about environment, lifestyle, and future cost efficiency, and Abu Dhabi is building for exactly that. Family living is another major focus. New communities are planned with families in mind, schools close by, parks everywhere, playgrounds, walking path, community centers. Developers are not just selling homes anymore. They're offering neighborhoods when people can grow and stay longer. Abu Dhabi is also building itself in a strong global business hub. Finance, energy, tourism, culture, and now a big push into AI and technologies. Billions are being invested in data centers, research hubs, and digital infrastructures. More companies are setting up here, more jobs are being created, and that naturally increases housing demand. And of course, infrastructure is expanding fast. The airport is growing, new roads and rail links are coming, mobility is becoming greener and smarter. Better connectivity means more movement, more investment, and more people calling Abu Dhabi home. This vision is not shaping the city, it's shaping the real estate market every day. Now, let's look at what's been happening supply over the last 3 years, because this is where the story becomes clear. 2024 was actually a steady year. Around 5,200 new homes were completed, bringing a total housing stock in Abu Dhabi to roughly 275,000 units. Good growth, but not explosive. Then we move into 2025, a big year for handovers. By mid-year of this year, around 2,400 homes were already delivered. And by the end of the year, we expect that number to reach almost 10,800 units, making it one of the strongest supply years in the past decades. Developers are clearly responding to demand, and we can see cranes across the city proving it. Looking ahead to 2026, the handover eased slightly with about 8,000 units to be expected. Still healthy supply, but not enough to create oversaturation. And that's the key point here. Even with thousands of new homes being added, population growth is still outpacing supply. More people are moving to Abu Dhabi for work, for investment, and long-term living. This is why we continue to see rents holding steady or climbing in high-demand communities. Supply is growing, but demand is growing faster. In real estate, that gap is everything. Now let's look at the communities that are shaping 2025 and 2026, what they're delivering, and what type of home buyers can expect. First is the Fai Al Riman in Shamka, a large handover of villas built for families and long-term living, a strong option for buyers looking for space and value. Another thing is a Yas Park Views, a villa-focused development, around 340 plus villas, built around a green space, walkability, and privacy. Third is the Yas Park Gate. It's a primarily townhouses and some villas, about 500 plus units, making it a popular choice for end users who want Yas Island living without a premium villa price. Fourth is the Sustainable City in Yas Island, delivering condo units and townhouses focused on eco-friendly living, lower energy use, community retail, and long-term savings. Fifth is the Saadiyat Grove. It's a high-end apartment in the cultural district, premium finishes, prime positioning, built for lifestyle buyers and investors. Next is the Saadiyat Lagoons, a villa handover open community. It's around 200 plus villas in the first phase that will be handed over. It's a nature-oriented, high density, and close to the mangrove. Next is Jubail Island. Luxury villas and townhouses will continue to hand over, including the apartments, low density layout, walkable community, and a strong end user demand. Then we have the Yas Golf Collection. Mainly apartments, golf facing, in close proximity to theme parks, attractive for holiday rentals, investors, and second home buyers. Now we have Regent Square in Reem Island. It's modern apartments positioned for mid-market buyers and investor wanting Reem entry. Then the most awaited Reem 8 and Reem 11 by SAS, both delivering new generation of apartments, modern layouts, and waterfront positioning. Bloom Living in Zayed City, one of the largest upcoming communities, over 4,500 units in planned, includes villas, townhouses, and apartments, a mini city in a scale. And here's the story behind it. This handover naturally shifts how buyers and tenants move across the market. More inventory means more choice, but the demand remains strong. So well-located communities continue to grow in value. Take Water Edge on Yas Island. Even with the Yas Golf Collection coming in, prices continue to appreciate because it's still one of the most affordable entry points in Yas living. Noya has also become a key upgrade community. Buyers move from older units into newer layouts, better designs, better finishes, because lifestyles means. But it's not just new projects performing well. Older communities still carry weight. Older Reem Island towers remain attractive for rental yield at a lower entry price. Raha Gardens in Talifa City stays family favorite, larger rooms, mature greenery, and real neighborhood feeling. So the trend is balance. New project brings supply and modern design. Older communities bring space, value, and stability. Both rise, but for different reasons. And that balance is what keeps Abu Dhabi market strong and heading into 2026. Now here's another major game changer shaping Abu Dhabi's real estate future. A huge expansion around ADGM, led by Mubadala and Aldar. ADGM is the City International Financial Free Zone, where global finance, law, fintech, investments, and consulting firms come to set one-stop shop. That makes it a magnet for high-paid professional, international investments, and demand for quality homes close to work. And just recently, Mubadala and Aldar announced a joint venture to expand Al Marya Island, the heart of ADGM, with a massive 60 billion investment. Here's what that means. The project unlocked the final undeveloped land on Marya Island, about 500,000 square meter. The plan is to include a 1.5 million square meter of new space, offices, luxury homes, retail, hospitality, waterfront lifestyle. The expansion will roughly double the Grade A office space on the island, making room for many more international firms. More than 3,000 luxury residences are planned, plus branded homes and high-end waterfront living. What that means for real estate demand. With ADGM growing, global firms arriving, and high-salaried professionals, many earning from 25,000 to 80,000 dirhams per month or more, relocating here. The demand for premium rentals and high-quality homes around ADGM will definitely surge. Where will these people want to live? Likely in prime or upcoming zones like Reem Island, Saadiyat, Yas Island, Jubail Island, and Raha Beach, but increasing also on Al Marya Island itself and anywhere offering good connectivity to ADGM. So the big picture is ADGM expansion plus Mubadala Aldar mega project. It's a new wave of demand for premium homes, luxury rentals, and waterfront living. In short, ADGM is not just a financial hub. With this new development, it becomes a lifestyle and real estate engine. This makes ADGM one of the strongest drivers for demand in Abu Dhabi's property market through 2026 and beyond. When we talk about Abu Dhabi real estate future, it's more than new buildings, new islands, or new master plans. There is a bigger story unfolding, a strategy designed to pull city forward for decades. Abu Dhabi is building connectivity, innovation, and the future economy all at the same time. And property values follow this shift naturally. First is the infrastructure, connecting the city, increasing value. The government is laying the foundation for highly connected capital, like Etihad Rail, linking Abu Dhabi to Dubai and Northern Emirates. Property near station tend to rise value over time. Next is the Raha Yas Airport tram, connecting Reem to Yas and the airport. This means easier commute, higher rental demand, and better appreciation. Third is the airport expansion, growing to 45 million passengers capacity. More tourists, more business travelers, more long-term residents. New roads and bridges across Saadiyat, Jubail, Yas, Reem, MBZ or Mohammed bin Zayed, and Khalifa City. Demand grows whenever travel becomes faster and easier. Every road, every rail, every tram line is a value driver. Connectivity creates convenience. Convenience creates price growth. Second is the innovation and future economy, the real estate multiplier. But the biggest shift is not physical, it's more economic. Abu Dhabi is investing heavily into AI, technology, and advanced industries. There is a new pillar beneath the market: AI and supercomputing, fintech, banking expansion, renewables and hydrogen energy, biotech, research, space tech, cybersecurity, and smart manufacturing. These are not short-term projects. They build a new generation of companies and high-income professionals. When tech and finance grow, high-salary talent follows, and people with long careers don't just rent, they buy. And the result? A property market built to rise. Infrastructures connect the city, innovation build the economy, and together they create sustainable, long-term real estate demand. This is why we're seeing capital appreciation, rental stability, and premium interest like Reem Island, Saadiyat, Yas Island, Jubail, Raha Beach. Because buyers are not just investing property, they're investing in the city Abu Dhabi is becoming. Just a short and simple conclusion: transport moves people. Innovation brings talent. Talent brings demand. And demand fuels the property market. This is Abu Dhabi growth story, and we are still in the early chapters. Abu Dhabi is not just building homes, infrastructures, it's building a global city of culture, lifestyle, and tourism. And that vision is a major value driver for real estate. The goal from DCT, or Department of Culture and Tourism Abu Dhabi, is very clear. Grow roughly 24 million visitors in 2023 to around 39.3 million annual visitors by 2030. That means more people are arriving, staying, and exploring, and many of them becoming tenants, holiday home buyers, or long-term residents. What's fueling this transformation? Major cultural hubs are coming online. The �K𝐜𝐺 National Museum on Saadiyat Island will open in late 2025, joining other icons in the pipeline for 2026, such as Guggenheim Abu Dhabi and a planned National History Museum. The cultural district is not alone. The wider entertainment and leisure offer is expanding. Coastal front developments, new beachfront zone, luxury hotels, resort-style living, and recreational facilities like beaches, marina, and entertainment zone are part of all of the plan. Investment is going into infrastructure and mobility, increasing the access to beaches, cultural areas, hotels, and resorts. This supports both short-stay tourism and long-term living demand. Why this matter for real estate? Tourism growth boosts demand for short-term rentals, holiday homes, service apartments, and premium rentals, especially in the zone like Saadiyat, Yas, beachfront communities, and areas close to cultural and leisure hubs. As Abu Dhabi becomes more attractive globally, many visitors eventually decide to stay or invest, which supports the long-term demand for homes. The combination of cultural prestige, leisure lifestyle, and improved amenities pushes communities towards premium positioning. Coastal villas, luxury apartments, resort-style communities, all with a higher value potential. In short, Abu Dhabi is not just building houses, it's building lifestyle, a global destination, and cultural brand. That brand growth becomes real value on the ground in property demand, rental yields, and long-term appreciation. So whenever you're thinking about buying a holiday home, an investment apartment, or family home, the city's cultural and tourism push makes it one of the strongest value drivers for real estate in 2026 and beyond. The rental market in Abu Dhabi continues to grow, not because just of hype, but because people are moving faster than homes are being built. We see demand across every price bracket, like lower budget apartments. Young professionals arriving for new jobs keep these units full, which means strong rental yields for investors, especially in Reem, Masdar, and older towers in lower entry prices. What about the mid-markets apartments? Communities like Reem Island, Masdar City, Al Reef, and Rahab Beach remain highly occupied. These are the comfort zone for tenants. Why? It has a good layout, good pricing, easy access to work and lifestyle. Townhouses and villas. Supply is still limited compared to the demand. Families want space, and space is not easy to replace. That's why rental prices in villa communities or townhouse communities have stayed stable, and even as new handovers arrive. Luxury homes. This segment is driven by high-income families, global executives, and golden visa buyers. They want quality. They want space, privacy, beachfront, golf, and greening, and they're willing to pay for it. So overall, rental remains strong, not just in one segment, but across the whole city. But here's the part many investors miss. It's not about buying where everyone buys. It's about buying where people want to live next. That's where the real growth happens. Let's talk about the most important investor insight for 2026. Why 2026 will be very difficult for flippers. If you're a short-term investor planning to buy an off-plan and flip in 6 months or 1 year, next year will not give you the same opportunity level as 2021, 2022, or even back in 2023. And here's why. First, increased developer launches. Buyers have more options. This reduces the urgency to buy your resale unit at a premium. Second, stronger competition in mid-market segments. For me, developers launching larger, better, more modern communities means flippers will compete directly with brand new off-plan prices, which usually offers easier payment plans. Third is the off-plan incentives are improving. Developers offer lower booking fees, more flexible payments, post-hander options, ADGM registration waivers, and service charge discounts. This makes off-plan more attractive than flippers premium resale. And fourth, buyers are becoming more educated. People are comparing location, payment plans, developer reputation, and long-term community vision. That means flipper need much stronger justification to sell at a markup. Fifth, mortgages plus golden visas encourage end users. More buyers are purchasing to live, not to flip, reducing short-term speculative demand. The bottom line is, short-term flipping in 2026 will be more challenging and profits will not be as aggressive. Long-term investors, those holding 3 to 7 years, will continue benefiting from a population growth, infrastructure expansion, rental demand, supply shortage in key villas and waterfront zones, zero property tax, zero capital gains, but short-term flipping is not the best strategy for the upcoming cycle. Heading into 2026, one of the clearest trends in Abu Dhabi real estate is the rise of end-user buyers. Supported by a stable lending policies, predictable regulations, and increasing mortgage adoption. The UAE Central Bank plays a very major role here. Over the last few years, the central bank has kept lending carefully controlled. No excessive leverage, no high-risk borrowing, and loan-to-value ratios that keep buyers financially grounded. Now, as the mortgage rates begin to settle and confidence returns, more residents are shifting from renting to owning. The trend is simple. Stable rates, more mortgage buyers, longer holding periods to less market volatility. And at the same time, the golden visa at 2 million entry has changed buyers' behavior dramatically. People are no longer thinking about a 1 to 2 year cycles. They think in a 10-year plans. And these buyers take mortgage with long-term confidence, upgrade from apartments to townhouses and villas, reinvest into a second or third property when equity grows, remain committed during market fluctuations, and anchor the market with stability rather than speculations. By 2026, this combination, central bank stability, mortgage growth, golden visa ownership, forms one of the strongest safety nets for the market. It means Abu Dhabi is not growing on hype, as anyone's saying. It's growing on long-term residence, finance responsibility, staying for a long run. This is why price swings remain controlled. And this is why demand doesn't collapse when global markets slow. And this is why Abu Dhabi continues to look like one of the safest real estate environments in the region heading into 2026. 2026 will be the year we see more new developers enters Abu Dhabi, both regional and international. This shift is not happening by accident. It comes from real demand fundamentals. Population growth, outpacing handovers, strong rental performance, end user and mortgage demand rising, tourism and economic expansion pulling new residents into the city. Developers see this and they want in. What do new developers bring? Fresh ideas and new products, modern layouts, smarter interiors, sustainable design, competitive pricing and payment plans, more choice for first-time buyers. Architectural diversity, not a copy-paste community, but new concepts. More lifestyle-focused communities, walkability, greenery, and mixed-use living. Healthy competition, pushing quality and delivery standard forward. But here's the key point many people misunderstand. More developers doesn't mean oversupply everywhere. Because the demand is not spread equally, it is concentrated. And even with more developers building, prime zone remain undersupplied long-term. Like Yas Island, limited new land, high demand for lifestyle and rental returns. Sadiyat Island, cultural plus beachfront positioning and global demand growth. Green Island, ADGM expansion keeps attracting high-income tenants. Jubail Island, low-density villas in nature cannot reproduce elsewhere. Raha Beach, waterfront living is finite and irreplaceable. Masdar City, eco-centric living, high rental occupancy from professionals. These areas are not just real estate zones. They are economic, tourism, and lifestyle hubs. That's why prices don't soften when new developers appear. Instead, competition increases in secondary zones, while primaries continue to lead in value. Simple summary for this is that new developers, more choice, but prime areas still limited and still in demand. And when the demand is strong and the land is finite, value holds and usually climbs. Yas, Saadiyat, Reem, Jubail, they will continue to lead value, in my opinion. But the smart investor is not only watching the peak, they're watching what's forming just before the curve. In 2026 is the beginning of Abu Dhabi's next growth wave and is forming new corridors. Here's where the future is building. First is the Zayed City, the city next government and residential hub. Bloom Living already set momentum. More developers will follow. Schools, parks, retails, and community infrastructures are coming, and prices are still early. Shamka, Al-Shamka, and Al Riman Belt. By Al Riman and Riman projects prove one thing: families want villas. This zone offers land, space, affordability that island district can't match. Perfect for long-term end users' demand. Third is the Masdar City expansion. Tech jobs and sustainability demand will keep apartments full. New faces and mixed-use district will support strong rental yields. A long horizon place for investors who like stability over speculation. Baniyas, Shakbut, or MBZ, the middle-income family market is the largest segment in Abu Dhabi, and it is underserved. Roads, schools, and community upgrades will help this area mature in value to 2026 to 2030. Rahat to Gantud Coastal Corridor. The Etihad rail line transformed the stretch in the future commuter belt. As connectivity improves, the corridor becomes livable, not just reachable. 6. Dairat Island. Still early, still raw, but with the massive tourism, sports, and hospitality vision, early-stage investors have the advantage if residential faces open wider. Then we have the Yas South and Saadiyat North. It's a long-term land. The city is moving outward. This will become the next generation of lifestyle zone when supply tightens on the main island. The simple insight: prime area, grow first. Future areas grow next, and we are standing right at the beginning of this transition. The investor who only looks today buys late. The investor who understands tomorrow buys early. And finally, let's summarize the truth. Population up by 7.5%, 5,200 units delivered in 2024, 10,800 units arriving in 2025, 8,000 units in 2026. ADGM expansion bringing 20,000 to 30,000 high-income professionals, Etihad Rail and the new tram station, massive airport expansion, tourism pushing toward 39 million visitors per year, Saadiyat, Yas, Reem, Jubail, Masdar, and Zayed cities delivering major communities, more families choosing long-term residency, strong mortgage adoption, new developers increasing choice, flipping becoming more difficult, long-term investing becoming more profitable, and the tax environment: zero property tax, zero capital gains, zero annual tax, and zero stamp duty. Rental yields remain strong at 5 to 8%, with certain communities performing above this range. This is why Abu Dhabi continues to stand out globally. Stable, sustainable, long-term growth backed by real demand, real population increases, and real infrastructure. Abu Dhabi is preparing for its next decade, and 2026 is one of the most influential years in this transformation. If you found value in this breakdown, make sure to like, share, and subscribe to my channel. It helps us reach more people who want to understand the market with real facts, but not hype. Drop a comment below with the where do you think is the next big growth zone is. I'll reply every comment personally, and remember, Real estate doesn't reward those who wait, it rewards those people who position themselves before anyone else.